Good morning and hello. Appreciate you being here. We're at 8:41 now, 19 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And you really ought to do that. 8:42, time to check in and find out what's happening on Wall Street this morning. This is a weird start to the morning. Let's see if we can sort all the indications out with Phillip Statler from Statler Financial Services. Phillip, good morning. How are you today?
Hey, good morning, Dave. Doing well today. It is, I read today is halfway through the year.
Yep.
Today is halfway through the year. And another interesting point is we are closer to 2050 than we are to 2000.
Oh, geez. You really like to make a guy feel old, don't you?
Thought I'd help you out there.
I can't tell you how much I appreciate that. I didn't get a chance to ask you before we went on the air, but yesterday we had a kind of tale of two stock classes. Blue chips on the Dow went up almost over 0.9%, up 400 points. S&P took a few profits, down 694. That's 0.11%. Nasdaq lost about 0.5%, $167. I didn't notice one stock on the Dow that might have driven it, but when you got the Dow going up by 400 points and everybody else flat to off, something must have dragged the Dow up yesterday. Was there any good news that I missed someplace?
I mean, the JOLTS report went up. I don't know if that was good news or bad news.
Mm-hmm. That would affect all of them. Yeah, that would affect all of them, I would expect. That's kind of surprised me. And I looked at the closing numbers this morning. I said, what gives? But all of it kind of got erased for the morning start again. We got a couple of really interesting things. JOLTS report that came out yesterday showed a rise in job openings, but the actual hires actually flat to off by a little bit during the month of May, which is kind of kissing your sister type stuff. But we got the ADP employment report out, the read on private sector jobs, the first of the big flood that we're getting this week. And for the first time in eons, we actually showed negative hiring in the private sector. They expected 90,000 new private sector jobs last month. We actually lost 33,000 of them. And before we went on the air, I was asking if the futures on your instant tick were showing any kind of a trend on it, because I'm kind of thinking, given all the chitter-chatter about interest rates, this could mean a better chance of an interest rate cut, but at the same time, it's profoundly bad news.
It is. I mean, and we'll see what happens tomorrow, right? Because we'll get the follow through of the U.S. Unemployment numbers and unemployment rate to see if those things really kind of line up or not. But it is disheartening to see that we've lost that many jobs, especially when we looked at expectations for some positive numbers. The other thing I did see, Dave, is that, you mentioned the JOLTS report. The other thing that came out yesterday, late morning, was construction spending. And it was expected to be down just a little bit, 0.1%, but it was actually down 0.3%. So that was another negative indication yesterday morning.
Might be where the loss of private sector jobs was, maybe, huh?
Yeah.
The ADP report is saying that it's, for the first time since 2023, it's a loss of jobs, just to give you an idea. But they're saying a good chunk of it is the trade war uncertainty again. And President Trump yesterday said, no, he's not planning on moving his July 9th deadline to whack those 50, 60, and 100% tariffs off companies. So the uncertainty isn't over, which just gets me to the point of really confusing as to why my fear and greed index that measures the amateurs so well is still solidly into the greed mode. I mean, we're in a bullish mood on Wall Street, aren't we?
Well, we are. And again, I think some of that, Dave, points to the FOMO, the fear of missing out. And because as this market continues to hit new highs, especially on the S&P 500, then people are thinking, well, geez, I need to go ahead and get in now. I mean, even I'm seeing it from some of my clients that had originally a month or two ago said, hey, let's back off a little bit. And now I'm getting phone calls saying, hey, let's go back into that little bit of a growth mode, and let's see what happens. And so I'm seeing it on all fronts right now.
And that fear of missing out is the biggest thing. That's why I watch the Fear and Greed Index, because it does tend to measure the amateur investor as much as anything. Need to make note that the FOMO syndrome got a little bit of credibility anyway for it yesterday, because we talk about the death cross all the time when the 50-day moving average falls below the 200-day moving average on the Standard & Poor's 500. Well, the opposite of that is the golden cross, when the 50-day average moves ahead of the 200-day average, and that happened yesterday, which is generally, at least according to conventional wisdom, an indication that we're into a solid bear market atmosphere. Once again, given the uncertainty, I'm still surprised at that.
Yeah, me too. I mean, we continue to see the markets continue to increase, and I think it's interesting because I am starting to see a few little headlines here and there of indicating some pullbacks. But some of the analysts are expecting some pullbacks. Some of the economists are expecting some pullbacks. And so, this third quarter is going to be telling on an interest rate watch, relative to does the Fed reduce interest rates sometime this quarter? Do the increases happen with the tariffs? There's still some uncertainty out there, Dave, as we head into the rest of this third quarter.
Absolutely. Other events that are affecting us a little bit, the quote-unquote big beautiful bill passed the Senate in its version yesterday evening late. Now it goes back to the House. The House will probably tinker. They'll end up going back to the Senate three more times. But at the very least, it may actually make it happen by the 4th of July, which is what President Trump had tried to impose on Congress, if you can impose anything on 535 presidential candidates.
Well, it's going to be interesting. Let me say this too, Dave, because let's face it, that bill only passed because Vice President Vance cast the vote to pass it. So it only passed by one vote. And now it's got to go to the House, and there's probably very little chance it will pass in its current form. To me, that gives us a little less optimism that it will even pass. I mean, I'm getting a little bit more concerned that it may not actually come to be.
I was starting to say I agree. The odds are starting to run a little bit against it. It's going to go back and forth a couple of times in all probability. My understanding is the real budget hawks in the House are hacked off of the fact that they had to peel a lot of the Medicare modifications out of it in the Senate. Otherwise, it couldn't be passed by that 51-vote reconciliation process. So some of the things that the budget hawks in the House put in had to get peeled out in the Senate. They've still got modifications in the Medicaid system, but a lot of the things that the House added in had to get peeled off, or they couldn't get it through the Senate at all, which means, once again, it's going to be kind of a doggy dance between the two for a little while, saying, no, don't do that, Mr. House member, or there's no way on God's green earth you'll get it back through the Senate again. So your point taken. It's not going to be fun. On interest rates, I did notice that Jay Powell was out doing the speaking circuit again yesterday, and he is not, at this point in time, taking a July rate cut off the table for the Fed. That might very well be one of the reasons that the bull market attitude continues, at the very least from the investors. And you came up with something really weird, for lack of a better term, told me. Del Monte, the big canned vegetable producer, declares bankruptcy? Wow.
Yes, file bankruptcy. Yeah, that was kind of a surprise to me when I was looking at headlines this morning. The other headline that I did see was Constellation Brands. Mm-hmm. They're the owner of Modelo, the beer brand, and they have adjusted their. Actually, I said I didn't have a report. They did report, actually, and they got beat up. They lost on earnings. They only made $3.22. They were expected to make $3.31. They lost on revenue as well, missed on revenue as well. I found it interesting that this is probably one of the first earnings reports that I've seen where they actually point blank look at tariffs and say that's where the misses are. Is the aluminum tariff had taken away their bottom line.
I suppose you make cans out of aluminum. I didn't even think that the tariff on aluminum would affect the beer industry, but when you put two and two together, yeah, that makes four. I didn't even think about that. They also, they said, blamed socioeconomic headwinds are hurting beer sales. Socioeconomic headwinds. Going to let you put whatever you want for a spin on that, Constellation. Other tidbits that you might have heard of from the investment world?
So I saw this, and this is a little concerning to me today, Dave. Half of Americans don't have any life insurance. Ooh. And especially the Gen Zers, only 36% of Gen Z has any kind of life insurance. A big study was done, and that's concerning because that's obviously the lower economics folks have, the less they have room in their budget for life insurance. But that's a big deal, and especially for young folks. Term insurance is not expensive, and it's something they could put easily into their budget. Something I think everybody needs to look at is and take an inventory of what their life insurance really looks like, because especially if you're the main breadwinner, right? That's a big deal. You pass away, what's your spouse going to do? It's a big, you look at the income you generate for that household, and not having life insurance can be a real big deal. That just kind of caught my attention this morning.
Absolutely. It's counterintuitive, but true as well, that life insurance is probably even more important for the young ones, because the unexpected ones, your share of the family income is even more important. Old geezer like me with without any heirs to speak of, the life insurance basically makes sure they bury me all right, but it's not as important for me getting up there in years, even more as it is for the younger ones, where you can really leave a gap in a family finance by not being properly insured.
Absolutely. I did see one other. This company is not a household name, but I did want to mention it because it's in the health insurance industry. Centene, I think that's how you say it, is a managed care provider, and they withdrew their 2025 guidance, and so they're falling like a rock today, down 31%.
Given the United Healthcare woes, anybody in the insurance industry puts out anything detrimental, I got to believe that's going to be amplified by 10-1 right now, isn't it?
Yeah, it really is. Talking about, their Medicaid business, and this big bill that could be passed, all that's weighing on their business.
No, understood. Resetting the table, good day for the blue chips yesterday, kind of an off day for the other indexes. 45 minutes before we open this morning, what are we looking at?
Well, on the index side, Dave, we've got pretty much red ink across the board. The Dow right now is down about almost $20. The S&P 500 is down almost $10, and the NASDAQ 100 is down about $80, which is about 1/3%. On the other side, we got silver down from yesterday morning when we talked, but up from the close 1%. Gold's up 1/3%. Crude oil's up 1% to $66.12 a barrel right now.
I was kind of hoping we'd stay under 66 for a little while. The Asian Rim market generally off overnight. There's a little bit of a zero-sum attitude there. If we have a couple, 3 days in a row, the Asian Rim tends to sell off a little bit, and that happened. We were down by about 0.5% on most of the exchanges. Over in Europe, it looks like they're taking a little bit of profits at the moment. The UK got a report out of their central bank that said borrowing costs were putting a real clamp on the economy, and that made the FTSE go poof all the way down. 1.6% down this morning. The rest of the European markets kind of buoying it up across the middle of the trading day. We're pretty close to dead flat in Europe, but there's some big ups and big downs over there going on off of banking reports. Need to get my retirement plans set and ready to go so that my dreams can become my plans. Phillip, how do I get a hold of you to make that happen?
That's why I created Core Retirement Design. Give us a call at 863-382-0037. With any questions you might have, schedule a 30-minute phone call. We'll talk through it and see if you're on the right track to the retirement you always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
All righty, and back here tomorrow morning, and I will see you then, or have a happy 4th of July if I miss you. I think I'm going to be playing golf in the morning.
All right, buddy. Talk to you then.
Be well. Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you again tomorrow. Until then, have a great day. Bye now.